Hello, Paul Gerard from Price Accounting Services. Welcome back. In this session, we're going to address some common questions which we receive relating to investment properties. So there might be something you're going to learn from this, or it might be something you already know, and hopefully it'll confirm something you already know. But let's start with some really common questions we get. The first one is, when more than one person owns a property, who claims the tax deductions if only one of them pays the expenses? Okay. Now this is a fairly golden rule of property investment, and it's this one. Okay. The land title generally determines how investment income and associated deductions are claimed. It doesn't matter who pays them, okay? So Dad can pay all of the rates, Mum pays nothing. Mum won't even earn any income. So it's whose name's on the title. So if that property is owned jointly or it's tenants in common between Mum and Dad, then 50-50. It's not a case of, and these are the misconceptions I hear all the time, that in the first year you buy it, you get to choose, or you can change it at any time. No, you can't, okay? So really important to clear up that misconception. The other one concerns, should we buy a property in one name or both names? Now, we've got a few guidance videos on this particular issue, and it's important prior to buying any property, and you can have a look at our video on issues associated with buying an investment property. We cover it in greater detail, but the issue is this. Generally, advice should be given prior to the purchase in terms of structure. Now, it's really silly to be buying a property if it's highly negative geared, putting in both names if the spouse doesn't work, okay? It is so inefficient. So think about those issues before you buy. Seek advice from a lawyer, an accountant, tax advisor, etc., to get your structure right. Also, your loan servicing and how your loan is structured, so that two people's credit isn't necessarily tied up incorrectly. And everybody's situation varies, and your mortgage broker is going to be the best guide for that. Okay, another question we often get is holiday homes. I'm going to claim this property and I might use it from time to time as a holiday home. Tax office aren't going to find out. Well, guess what? The tax office is pretty good at this stuff. And when you own a property that's at the Gold Coast and you live in Sydney or Melbourne or somewhere, they actually look for that sort of misuse of a property, okay? Hard to find, but there are ways and means, and they do tend to find it. So the rule is this: if you're going to use a property for private uses, then you need to adjust the deduction to scale them back for that private use as well, okay? So discuss that with your tax advisor and get it right. And the next common question I get relates to something fairly similar, and that's, I own an investment property, I want to rent it out to family or friends, etc. And I know I'm getting less rent than I could be getting. What are the issues? Okay, there's a tax ruling on this one. And the tax ruling says that if you're getting non-market rent, you must scale back your deductions to reflect that non-market rent. So for example, let's say you've got an investment property and you put your mother in there and she's a tenant and she's paying half the rent that you probably could get otherwise. Then you're only entitled to half the deductions, okay? So it's important to scale that back. Easily detected. Tax office say, okay, who's your tenant? Oh, Mrs. Smith. Brad Smith renting to Marjorie Smith. Hello, what's going on here? And why is it rented $300 a week for a house in Melbourne? Doesn't sound right, okay? So watch those things. Another common question concerns vacant property. Can I claim deductions? Yeah, I'm going to rent it. It's just not ready for rental yet, etc. Okay, the answer is probably not. A property must be available to be rented, so if it's not habitable, you certainly can't claim deductions for it in that same way. Complex area, and there might be some deductions available, for example, for interest under a special ruling, but talk to your tax advisor about this one. Remember, a property can only be negatively geared if it's available for rent and truly available for rent. So sham arrangements by putting an ad on Gumtree, they just don't fly, okay? Another common question relates to repairs for an initial new acquisition. This is covered in greater detail in one of our other videos, but initial repairs are not tax deductible, full stop, under any circumstance, okay? So the assumption here is that when you buy a property that you're buying it in a good state, and then if you don't buy it in a good state and it needs work, then the cost reflected that poor state. So for example, let's say you buy a property and it's missing a front door, and then you're up for $1,000 to put a new front door on it, then you paid $1,000 less for the property in the first place. The new door is not deductible, okay? So really important. We get taxpayers who try and argue the point, but then I fixed it 3 months later, so is that deductible? You don't have to have a known defect. So even if your defect is unknown to you, for example, block plumbing, and you find roots in the plumbing, you might want to get a view of the plumber in terms of, well, the blockage occurred very recently, or this has been a long-standing problem, because that could guide its deductibility. It might verify that it's a current problem. For example, somebody just driven over your sewer line or something like that, and therefore it's unrelated. It didn't exist at the time you acquired. So really important stuff in that. And another common question we get is, can I pay my spouse to manage my investment properties? No. Not unless she's a property manager and a licensed real estate agent and doing it as part of a business, in which case you would need to pay her in the same manner that you would pay any agent, okay? So, and it'd be through a business. So take care with all these common questions. They're all very regular questions we get asked, and important that you don't get trapped into something incorrect. So if you ever need any further guidance, watch our other videos in this series, speak to your advisor, and more than happy to speak to you if you're interested in engaging a great tax advisor. And we look forward to you watching another one of our sessions. Subscribe if you choose, and we'll see you again. Bye.